buy, hold, sell. We love to have guests come on and give us their forecast for 2024. But our guest today is actually going to turn the tables. He's not going to give us a price target on the S&P, but he actually has some forecasts out there that I think is going to leave a lot of people scratching their heads. Welcome everyone to Buy, Hold, Sell. I am your trader Todd Schoenberger, and I'm joined by my friend and co-host Tobin Smith out in sunny and what he is saying is cold Scottsdale, Arizona.
It's cold, damn it! It's cold.
Toby, I just look. It's 55 degrees, Toby. I mean, come on.
It's almost under 40 degrees. That never happens.
Okay, all right,
wow,
whatever.
what a bunch of wusses you guys are. You're 40 degrees and you got a space heater probably under your desk.
He's got a space heater right there. He's got a blanket. He's got the whole thing going
well,
on.
I also have
right there.
I also have the heater is broken down. Okay, so that's why I'm a big wuss puss.
Well, we have David Nelson joining us today. He is the Belpointe chief strategist. He's also host of the Money Runner podcast. Definitely want to go check that out, and we'll talk about that a little bit more as the show goes on. But David, I do want to welcome you to Buy, Hold, Sell. I got to start with you though on this, because when I asked you for a price target on the S&P 500, you said that's malarkey. Why would I give such a thing? Now you're coming out thinking, well, we might actually have a recession in 2024. Can you explain for the audience?
Look, this is a day-by-day process. You know, this is a battle, all right? We're in a war. We fight it every day. We get new information every day. For me to put a target on the market where it's going to be 12 months from now, look around the planet. Every corner of the planet is a geopolitical hotspot. We're knee-deep into two wars. We're going to be issuing a lot of debt. But on the other side of it, we got some pretty exciting technologies like artificial intelligence, which will clearly be the biggest investment theme of my lifetime. So how can I put a target on the market where it's going to be 12 months from now? I've got to take it day by day, take my shots, and try to make some money.
Well, I'll tell you, David, to your point on AI. So one portfolio we run started last year, thank you very much, was the AI picks and shovels. And of these 10 stocks, 8 of them hit either all-time highs in the last 2 days or 52-week highs. And today I'm looking at the screen and PNW, Penn Networks, Arista, AVGO, Broadcom. In my opinion, these mega caps and Microsoft and so on, they are the safe play. If you were going to make a bold prediction here, I'm going to say that if I was back running a money market, a mutual fund or a hedge fund, and I would be telling my traders and guys saying, listen, David Nelson, a very smart guy, says he doesn't know what the F's going on in, day by day. So let's go with the things that we absolutely know are going on. And in our surveys of CEOs, high, mid, and low, 100% have allocated a significant amount of their IT budget to integrating forms of AI. So I'm going with that.
I think that's a clear point. I would say it's even bigger than that. I think it's going to be the biggest investment theme of my career. I think it's really important for viewers to lean into the technology. Don't be afraid of it. Because if history shows us anything, it shows those that adopt technology usually move on. Those that try to resist it end up on the wayside. I think perhaps some of the biggest beneficiaries of this technology will be the thousands of companies that embrace the technology to enhance the top and bottom line. I can think of a handful of companies right now. Look at GM. They're using it for fall protection on their assembly lines. They have cameras looking at the robots. They can predict what the robot is going to break down. On a company like John Deere, why would anybody think that John Deere could use AI? They actually have artificial intelligence software cameras looking at the ground and determining the difference between a weed and a crop and spraying only the weeds. That's that's an enormous benefit to mankind. It's a health benefit.
Yeah, absolutely. And I'll tell you this. So I'm an investor. People know in a company called Versus AI. It's now a public company, but I'm still on the board and stuff. OMG, when you look at the law profession, you had an assistant because you're trying to say, hey, assistant, go look at the 435 briefs on this thing and give me a summation, and then I'll take it and I'll redline it and then blah blah blah. the largest law firm in the world is using this versus technology. And they have 180 different offices in 104 countries. And every time they have a big legal brief that comes out, it has to be translated into, all the major 10, 12 languages. And those lawyers go for about 400 to 500 grand a year because they speak Swahili and they speak English and can do it at a high level. They've fired half of them in the last 3 months. They're just doing it purely automatic translation, word for word.
I'm using it right here. I'm using large language models for, it makes my job a lot easier.
Yeah.
I actually need less people. I can take, 40, 50 pages of research, pump it into a large language model, give me the 5 bullet points I need right now before the market opens. It's a real time saver.
Yeah, my new best friend is bardgoogle.com because they're actually a real-time they don't give you I only go to October 2022, so sorry. And this whole thing of large language models, as we saw with the lawsuit this week, you can't, in Europe, you're going to have a rule that's coming out very soon that is going to say that if you can't show the origin of your content and the copyright status of your content, then you face a $2 million to $10 million fine per incident because Europe actually cares about copyrights. The United States is like, let's just steal it until somebody sends us a cease and desist order. And that is rapidly coming.
That's probably a risk out there. And I guess it begs the question, do all the spoils go to the Microsofts of the world because they have the capital to pay for these patents and pay this access? I know some of them are just started licensing from the New York Times.
So for $1 million a year, they're stealing 100 million of media. That seems like a pretty good business model, David. Just steal 100 million worth of media and then pay $1 million for it.
Pretty good, right? So, David, what are your thoughts? Because we open it with your thoughts on a possible recession, but I think you're looking at historical data and you were looking at where our interest rates are right now. What do you think? I mean, because it does seem like, based on your analysis, that we will have a high risk.
I'll give you some of the ways that could play out. I mean, rates are going to come down, but let's hope they come down for the right reasons. Because right now the market is pricing in all these cuts, but we may find that the last mile of inflation is a little tougher to get to. We had a CPI print this morning. I think it was 0.3, a little bit hotter than expected, month over month. Year over year, we've been kind of sideways for about a month right now. So to get down to that 2% target for the Fed, that might take a little bit.
Remember, 45% of the print today was shelter costs.
Yeah, that's a big
That's a big. And they're not going.
By the way, I hope that comes down a little harder because my rent rolls over pretty soon, and I'm gonna have to sign a new lease, and I could really use a break because I didn't get a break last year.
No, I mean, depending where you live, we have this big United States thing, so it's an example of one. But everybody knows the issue. If you have this 2 or 3% mortgage, you're not moving. You're not going to go to a house. 40% of the homes in the United States are owned free and clear now, David.
Yeah.
So
that's real estate.
You can't move.
Yeah, that's real estate. I'm a home real estate. I'm talking about residential real estate. So
moving back to the interest rate argument, though, the one thing I noticed in today's report, I don't see a 2 anywhere in sight. And how is it that the Fed could possibly cut rates if we don't even have a 2 handle at this point?
Well, I think I can, let me make an argument for that, because Jay Powell said it in the last press conference. He was asked the question, will you cut rates before you get to 2%? And he said, he pretty much implied likely, because there's a lag effect to rate cuts. And if they wait till 2, they're too late. All right, then the economy will roll over. I don't think they want to make that mistake. So my guess is that the idea that they're going to, cut in March, that's probably not going to happen. It's probably sometime later than that. But look, we've already priced that in. And you got valuations in the market right now where 22 times earnings right now. That's pretty much the upper end of where we've lived for the last decade. A decade, mind you, where Fed funds rate was probably average about 300 basis points lower than it is right now.
Yeah.
So
Right.
right now, we would need either some kind of productivity bump, maybe AI gives us that, some kind of productivity bump. But if rates don't start to come down, then maybe that multiple is going to come back down to 19. And then you take 19 times maybe 217 instead of sorry, 19 times 242, which is the number that we're looking at for 2024. That's about where we are right now.
Yeah, dude, I just never buy the mathematic argument. Like, gee, I'm now going to sell my stocks because it's hit this certain, valuation. In the fact that that's the entire market. And the idea that if you have a business model like a Meta, and two points here. Number one, Meta had the age of enlightenment last year, right? And they cut 80,000, employees, and shockingly, their stock's up 225%. If I'm at the board meeting this January, if I'm on a board of the company, I'm saying, remember all those Nimrods that we hired, in 2001, 2002? We're not getting money out. Do you see what happened to Facebook stock when they got rid of 21% of their employees? Yeah. Google fired 5%. I mean, what you're going to see is this great enlightenment, I believe, over all companies.
I think a lot of that came from Elon Musk when he went into Twitter and he cut the workforce probably in half, and it was still working. And in some cases, I thought it was working even better.
Yeah.
Every CEO of every major technology company on the planet looked and goes, "Holy crap!"
That's a smart thought there.
Yeah, I mean, he sort of gave them permission and their boards to have their age of great enlightenment. And oh, by the way, can you tell me what David does over there in the freaking right-hand corner? No, bye-bye. Whereas during the pandemic and post-pandemic, there was such a rush to working from home and this and that and so on and so forth. And, sales went up and margins went up. So you could reasonably do it. But if we're going to return to reality on the output of people on working from home, etc., then my argument for the year would be that the earnings for the ones I care about, the actual growing companies that are highly profitable, I believe they're going to have their margins increase. And then there's the law of large numbers. The more they get in customers, the more they get the feedback loop, the positive feedback loop of more revenue, and then they become the ones who always meet or beat on the quarter. So now I don't have to worry my pretty little head about what the hell's going to go on with XYZ company that's in the mid range. And then if you look, what was interesting to me today is like the Russell 2000 was supposed to be the reversion trade. Another word I just can't freaking stand, as if somebody other than a computer would just say, "Oh gosh, it's down 14% from its normal rate, so I'm going to buy all Russell 2000." No,
that can be a dangerous trade.
Yeah.
A great teacher of mine from my days at Lehman, a guy named Dan Niles, really bright guy. He once said, "Look, when you're bottom fishing and you're going in at the bottom and you think you're getting a good valuation, you need a catalyst. You need what's going to change at this company that's going to turn this thing around. Otherwise, it could be a value trap."
Yeah, and remember that. I mean, again, I always look every day before we do this show. There's 79% of the trades today were, automatic algo computer. The algo is not looking for the bottom dweller. There's no algorithm that says, "Oh gosh, this stock is down 40% and the earnings are only down like 19%, so I should buy this stock." Well, that's bullshit. The algo says that Arista Networks, our number one performing stock in the last 12 months, just hit a new high on higher volume, hasn't issued any stock, is on a relative basis, on a forward basis, because Dan Niles will be the first one to tell you that, hey, NVIDIA on a forward basis is about a 27 PE. And wouldn't you want to own a company on a 27 PE that's going to add another $3 billion of sales? Or are you going to try to say, well, let's get SM something that's beat the crap and it's a great value? Well, that hasn't worked for I don't know how long, David, but I've known you a long time.
I think NVIDIA is a great example. You take NVIDIA and compare it to, say, what was the largest company on the planet, Apple. I think Microsoft actually passed today.
Yeah.
And look at the difference in the numbers. You got, NVIDIA was up 230% last year, and the multiple went lower.
We went lower,
Apple
right?
Had a good year. It was up about 50%, but it was all multiple expansion. You're paying 29 times for a company that's growing low single digits, maybe.
Yeah. I'm gonna go back. We always go back to what's the safety trade. The safety trade is megatech compounding compounding earnings at about 18%, and on a forward basis, which you can now project so much better. Certainly on the software side, because nobody cancels their ServiceNow contract. Nobody cancels their
a recession would even enhance that even more, because in a recession, you're going to want to grow. Growth is the most expensive when there isn't any. And when there's no growth, like in a recession, NVIDIA and these other companies, they may grow slower, but they're going to grow. They're going to grow. And if I'm going to hide out somewhere, that's probably a place I'm going to hide.
Yeah, I know Charlie Munger is rolling over in his grave right now, but Charlie Munger did have it right when he taught Buffett that you don't buy these cigar butts, these companies that look like they're on life support. You buy a company that's got a giant moat that can grow, that has high profit margins, etc. And they've done okay, but they're the only value, whatever freaking value means, that really has worked. And one of the things is because they own so many companies privately, and they generate so much cash flow, and they buy back their stock, and they do a lot of things to manufacture those the earnings. But they're sui generis, right? They're a group of one. And for the regular normal operating company right now, man, I'd love to have zero incremental costs. Your ServiceNow, you have a 52,000 account. You bring out the new AI business, and you don't have to pay a commission to the salesperson because they already paid a commission on. So now when you add on.
Now you're making me mad because I sold my ServiceNow too early, and I have seller's remorse.
Well, it's just the incremental profit is like 98%, versus maybe 75% because you had to pay fees.
But there's a conversation right there. If a lot of these companies, these quote unquote these software companies, the gross margins on them are just through the roof. This is why we love these companies. But AI could actually, cannibalize a lot of the profitability of some of these companies, because some of these platforms could actually be done away with by smaller companies coming out with a new AI product, because the code is writing itself. You don't need an army of engineers to write.
Well, that's for sure.
It's turning a simple coder with marginal skills into a super coder, writing millions and millions of lines of code. I have no idea whether whether or not that's going to happen or not, but it's certainly something I'm looking at.
Super coder, I like that, guys. Well, let's leave it there on this block, because coming up next, we have to ask David what his thoughts are on Boeing. He's been all over the news, all over the financial press. Everybody is asking him because he's also a commercial pilot. So he is an expert's expert to speak on the subject. So with us today,
I've known David for like 20 years. I've never seen him fly a freaking jet. Okay,
come on. He's flying to all those concerts. So,
that's right.
So with us today, we have David Nelson. He is Belpointe's chief strategist and also host of the Money Runner podcast. We will have some information for you in the description on the Money Runner podcast. We welcome the audience to go check it out. But we'll be right back after the break. Please stay with us.
And it follows the Drug Runner podcast. That's perfect.
All right, that was good.
Buy, hold, sell, brought to you by CrossCheck Management.
We give game day a whole new meaning. What does it mean to be a leader?
It's taking my first solo flight.
At the University of North Dakota, we lead our own way.
You make me sparkle, you make me tingle, even the stars are brighter when I'm with you. And when I surrender to a tasty kiss or two.
Martini and Rossi iced tea.
You make me sparkle. Yes,
Make the moment sparkle.
Stocks finished flatline today, despite the inflation report coming in hotter than expected. There's all kinds of reasons for that, but it does have a lot of traders wondering, will we be seeing rate cuts as planned as early as March?
No.
No. I say no. I say not even maybe second half, but that's a whole other story there,
Okay.
Toby. So with us today, we have David Nelson. He is the chief strategist at Belpointe. He's also host of the Money Runner podcast. David, on the Money Runner podcast, how can people listen to it?
Go to YouTube. Just look for the Money Runner, hosted by David Nelson, and you'll find us there. Also on Spotify, but most of my fans, go to YouTube right now. We just had our last interview was with Dan Niles, went really well.
Dan, I love him.
Fantastic.
I didn't realize that you worked with him at Lehman.
Actually, yeah, when I was at Lehman in 2000, they brought Dan Niles in as a senior analyst, and it was a real marquee move. He was really well thought of back then. They built a hedge fund around him all through that. He was there long after I left. I left in 2001, and he was probably at Lehman, I think, right up until the bitter end.
Yeah.
Then he broke out and he started the Satori Fund. Brilliant money manager, brilliant mind. As a matter of fact, in the last podcast I did with him, he really talks about how he goes in. Here, you're talking about a guy who was actually in Facebook when it was like, just above 90, in Intel at the absolute bottom. He knows how to do that.
That's great.
Hey, Todd, note to self. Let me contact Dan and get him on it, and so he'll say some nice things about David. Dan Niles, okay, right? He's a bright guy, etc. But did he ever play lead guitar for the Animals?
For the Turtles.
I'm sorry, for the Turtles. Isn't a turtle an animal, for crying out loud?
The Turtles, and that's the other thing we do. He is the lead guitarist for the Turtles, or was a lead guitarist for the Turtles. We're trying to get him to sing or strum a few songs of Happy Together, strum chords of Happy Together for us, but maybe next time. So, but David, I got to ask you. Let's switch topics on this. As much fun as it is to go down memory lane, we do need to talk about something that just happened last week, and that's on a Boeing 737. We had Alaska Airlines flight taken off from Portland, Oregon. All of a sudden, it had a blowout on the side. But thank God nobody was hurt or killed. But David, you've been talking about Boeing nonstop because you are a commercial pilot. So what's the story? Because the stock dropped. It was up today, though, surprisingly. Are traders thinking the worst is over?
I'm not sure. I actually was long the shares when that took place. I exited. I chose to leave the shares.
Yeah.
I've been down this path before. These things usually take some time. Look, it could have been a lot worse. The plane, after I had left Portland, it was passing through 16,000 feet in the climb. And that's where the plug, they call it a plug, and it takes the place of the emergency exits. That's where it blew out. If it had been at cruise altitude, say 36,000 feet, I'm convinced there would have been loss of life.
Yeah.
That's when people are standing up. The air pressure differential at that level would have sucked out anything that wasn't bolted down. So they skated through that, but it really brings back the entire mindset. There's some kind of culture thing going on at Boeing, and it really goes back to the history of this plane. A little history on this, the MAX and the 737. The 737 was around in the 60s. It was a real workhorse, a fantastic plane. And they had to make a decision on making a new airplane with advanced avionics and new engines. And they decided not to go from scratch because it would have meant a big delay because of regulatory issues.
Mhm.
So they stretched the airplane, and that's when all kinds of problems started to happen. They stretched the
That's
plane,
interesting.
on a couple of new engines, some new avionics. We had the tragic crashes in 2018, 2019. And this is just kind of another black eye. I don't think it's anywhere near as severe as that, but I decided to step aside.
David, I was intrigued by a report I heard last night, which basically said this. This is for a ex-Boeing engineer. He said, I was hired like in 1958 in Reston, Washington, and I helped build 747s and 737s, et cetera. But the executives were right next to the manufacturing area. And then all of a sudden, the executives decided that we're going to move the executives to Chicago for God knows why, except maybe they gave them, free rent for 5 years or something. And then they moved to Northern Virginia to be closer to the defense industry. And he said, when you separated, when you just didn't have the fear that the CEO was going to come down and grill you on questions, or the chief safety officer was not physically in the building where you're making the planes, he said that changed the culture. Does that ring true, do you think?
Yeah, I think that does ring true. There was a time for pilots, if it ain't Boeing, I ain't going. That was the phrase that was out there. And as the company decided to really press on with manufacturing, and once they started the 737 MAX line, it sold like hotcakes. But then they found and really kind of hid the fact that there were some real design flaws in the plane. And they had put in almost a little automatic pilot to help make up for those design flaws. They never even told the pilots about it. That was the real.
What were the design
real
flaws?
Scandal. When you stretch the plane, all right, the aerodynamics are different. When you put on new engines, right, they're much bigger. So now you've got to raise the plane up. I believe they had to raise the nose gear up a little bit. The design of the aircraft gets a little different. They found some flight instability. So they put on some automatic, it was called an MCAS system. And that actually caused the death of 346 people because it failed. But what was even worse is the pilots didn't even know it was there.
Yeah.
When the plane was going out of control. This is obviously much smaller, but this was also, I believe the reason the plug is put in is because the configuration of the seats on the Alaska plane was a little different than other MAX 9s. Because remember, only 170 aircraft were grounded. There's more MAX 9s than that. They didn't all have this plug. And this blew out. It was tragic. And now I saw a headline from United Airlines. I don't know if it's true or not. Loose bolts. That doesn't sound like it doesn't sound like the Boeing of old.
Well, I couldn't believe that the FAA waited like 3 days to come out and slap their what.
It's
but
the government.
You read about this if you just look up on that bargoogle.com incidents of bolts that are missing on commercial airlines. They're all Boeings. Now, how can after the 46th reporting of loose bolts or missing a bolt, wouldn't that sort of raise a few red flags, at least with me?
It should, and this is the reason why I exited it, because even if they get this right, all right, there's going to be a tendency by the FAA and the NTSB to go all the way over to the other side and maybe even be more cautious and drag their feet in terms of approving things. So I don't have enough information. And when I don't have enough information, I just got to sit back and, you know what? I got to sit back here, watch this thing play out, because even at this level, it's not a cheap stock right now. It's still fairly expensive.
Oh yeah, 226. Yeah. So what is just curious if you know this, the cost for one of these planes, one of these 737s?
I don't know.
Okay.
I'm guessing a couple of $100 million. I'm not sure.
Because when an airline buys, they put in a contract, they're buying dozens of these 737s.
Yeah, but they're actually not buying them, Todd. Air Lease is buying them. Quintus is buying it. They don't own any of those fucking planes. They lease them from the airplane lessors who, because of their, located in Ireland and other places, they have tax benefits.
Well, I got that, but somebody's buying them.
I know, a leasing company is buying them. And then they're leasing them to the airlines. And the actual end result of that is another reason why they're going to have problems. Shame on, I mess up one, shame on me, but you mess up again, it's shame on you. And so I'm told by my pilot friends that the leasing companies are going to get a real shakedown from the FAA as well. They, in theory, sign away all their liability when they lease it to these guys. It's a triple net lease and it's just a financial lease. But I don't think that's going to cut it either.
I'll give you an indicator to look at. If you're looking out there if you own the shares or if you're looking to buy the shares, watch the order book. The bright spot of all this is Boeing was sitting on 4,500 orders for this aircraft. We're going to need
Amazing.
a massive amount of aircraft
Yeah.
over the next 20 years. That's the good side of it. All right. So watch the order book. If that holds and increases, it's probably safe to go in. But if you start to see that it deteriorate and some airline pulls back and say, you know what, I'm going to switch over to Airbus for that order that I'm getting 3-4 years from now. That would be a real negative.
Well, that's a very, very good point. I'm sure somebody's going to start a newsletter or a service just on counting
The
the
Boeing
order book. Yeah.
There you go. There's
Yeah.
a newsletter for you.
Yeah,
There
I
you
don't
go.
Started.
Well,
it's not enough. It's not amount me enough, David. That's why I wouldn't really do it.
so we'll say removing the airlines on the travel and leisure sector, though. What are your thoughts? Are you bullish?
I own one stock in that sector. I own Expedia. It's a new purchase for me. And believe me, I didn't get in at the bottom, but it did have about a 6-7% pullback after hitting it, a recent high.
Yeah.
I looked at the numbers, and these companies are free cash flow machines. I mean, the free cash flow yields are pretty high. The negative of the company is they've been inconsistent. They get it right one quarter, and the next quarter they blow up. I have to look beyond that a little bit when I see these kind of numbers, because an earnings report, we're going into earnings actually starting tomorrow.
Yeah.
An earnings report is not just a report card on how good or bad the company did and the health of the company. It's a report card on Wall Street and the analyst. How good a job did they do in getting the number right? Very often your opportunity comes because the company hits the guidance that they laid out, but maybe the Wall Street got too bullish on it. They missed the number, stock goes down. Nothing's really changed at the company. That's an opportunity.
Yeah. Well, what I like about Expedia, it is global. I mean, it is literally global in every developed country in the world. So you get the benefit, obviously, post-pandemic of people pin up travel, et cetera. It's very easy to use. I use it almost every time I travel because I get everything right there, and it's got all my numbers in there and yada, yada. And the incremental sale, as I say, on the software is they've already paid for the software. So there's no more, a very little platform. There's a lot of memory and a lot of hard computing, but that's now all in the cloud. So I like the business.
I love the company right now. Long term, I would put as a caveat, my biggest concern is actually AI. AI could maybe go in there and take a younger company and maybe able to do some of those things with a more cost efficient way.
Well, I mean,
that's in the future.
Yeah, OpenAI, one of the apps that they've been advertising is essentially, okay, I need to go from Scottsdale to San Francisco to Idaho, back down to Texas, et cetera. Make that happen. It's there in,
It's
20
pretty
seconds.
scary stuff. It's pretty scary stuff.
Yeah.
Show me where all the Chick-fil-A's are. Yeah. So David, let's talk about favorite sectors before we close out the show. You can't say technology though. Everybody says technology. Give us a different sector. Give us something.
Please
that
give
the
us
audience
sectors
wants to
that
hear.
underperform, just so Todd can make a clip.
I would say
give us an exclusive,
if there's a sector
David Nelson.
outside of technology that I'm long now. That was an underperformer. That would have to be healthcare.
What was it?
Healthcare.
Healthcare.
Oh, healthcare.
I would say my favorite name in the space right now is Merck. There's a lot of choices out there, but Merck had a bad year from an earnings standpoint last year because of some accounting issues and because of a large purchase that they made. You're going to see a massive bump in earnings this year. And I'm going to leave you with one number, 19 billion. 19 billion in free cash flow for this year. Yeah. That equates to about 6.7% free cash flow yield. So I'm kind of comfortable there. Where I'm a little nervous is an area that I exited were the pharmacy benefit manufacturers like McKesson and some of the others. I was concerned there. The numbers are great. They're minting money. But there is so much potential regulatory pressure coming on these companies because of the lack of transparency. I think that's an area that could get hit.
Yeah, I would add that so CBS, which owns their own PBM and et cetera, and McKesson, we actually are long McKesson simply because they're the largest GLP-1 distributor, and the price that front end fee of $1,500 a stick, that's not what McKesson pays. And McKesson buys at a significantly lower price, and like $325. And then to get market share for other stuff, they're going to the pharmacies that are not part of Amazon or part of or United Health, and they're selling a ton, and they're getting a very nice margin because the margins in distribution are not very good. But in this particular case, they're getting a great amount of margin.
And I'll leave you with the caveat on McKesson. I'm a quant, and a lot of what I do is model based. McKesson ranks at the top from a model standpoint. I can't dispute the numbers there. The numbers are fantastic. My decision was really just subjective because of what I fear from government. But the numbers right now, you look at a spreadsheet, it's hard to deny what you're saying.
Yeah, it's the second order derivative. The GOP success has created this huge demand. They're now building more supply, and McKesson has the franchise where the non-aligned pharmacies and Walmart and so on and so forth depends on them. And as opposed, it's just the law of big numbers. A lot of their generics are selling, a wholesale for 75 cents a bottle, and it costs them 55 cents. But in this one, they're buying it for $75, $80. They're selling it to Walmart at $3.50, and then Walmart is making no money on it because most of their people are getting it from Medicaid or from Medicare Advantage, and those prices are fixed. So they're in the sweet spot of the GLP.
I like it.
Phenomenon.
I like it a lot. There's some good. There's definitely some good advice for the audience. That's for sure. So, guys, we're going to leave it right there, and we're going to close out the show. David, you were wonderful once again. Are you still strumming the guitar?
My guitar days are over.
The
closest I get to a guitar is one I got hanging on my wall.
Okay, all right.
Well, he's also got a few gold records too. All right, so let's not.
There you go.
I can't
I thought we
stand
could have a buy
humility,
wholesale
David.
concert.
You know that I hate humility.
Outstanding. So everybody, check out David Nelson's podcast on YouTube. Look up Money Runner with David Nelson. You can check all that out, see what he has to say. Some wonderful interviews. I know we'll be taking a look at it as well. So on behalf of David, thank you so much for joining us on Buy, Hold, Sell. I got to thank you for that.
Thanks for having me. I hope you have me back soon.
Oh, hell yeah, you got that right. So on behalf of David Nelson and Tobin Smith, I am Todd Schoenberger. Thank you once again for joining us on Buy, Hold, Sell. We'll catch you next time. Take care. All right.
Buy, Hold, Sell, brought to you by CrossCheck Management.